What's up everyone, it's Contact with MoneyVest. So I'm back in Dubai at my home office here, and we need to have a discussion because markets are clearly in a full-blown free fall right now. We've got the S&P 500 down over 1.2% as of the time I'm recording this video. The NASDAQ is down almost 2%, all thanks to Tesla, of course, down over 11% on the day, along with a lot of other stocks selling off quite aggressively here after, of course, earnings came out. Tesla now down to $217 per share. So this right here is the entire platform for our MoneyVest. If you want to get access, there is a 51% discount. You can track all the earnings as well as the revenue and the earnings expectations and the beat or miss for these companies as well. Tesla, of course, beating revenue expectations but missing earnings expectations by 52 cents and was down about 44% on a year-over-year basis, selling off, of course, quite aggressively. So if you come over to Tesla, you'll notice that the stock price is down to $217, down over 13% since yesterday's sell-off as well. My portfolio is bleeding, as I'm sure you would guess, because Tesla is one of my biggest positions. So down almost 12% now, trading now $217, breaking down from this area of symmetrical triangle, and it's taking down the markets with it, with the S&P 500 down over 1.3, and from all-time highs, it is down a little bit over 3.5%, and the NASDAQ, which again is QQQ's, down a little bit more than that. We are now officially in a quote-unquote pullback for the NASDAQ, because if I come over to the market thresholds for all of you, so this right here is the market thresholds that we identified for for the entire S&P 500, NASDAQ, Dow Jones, Russell 2000, but this right here are going to be some of the things to keep in mind. If it's a dip, if the markets are still within 0 and 5%, it's a pullback if we are between 5 to 10%. So S&P 500 right now is down over 3.6% from its all-time highs. The NASDAQ is down 6.5% from its all-time highs. So that's going to put us in a quote-unquote pullback for the NASDAQ, and a dip for the S&P 500. So that's where we are with both of these important indices. But really what I want to show you is exactly the entire how much I'm down and what I'm planning to do, because these buying opportunities don't open up very often. They're very, very rare to come by, and that's exactly the whole point of this video, is that the fact that we're seeing the markets roll over is a rare occurrence in itself, and I would much rather have you take advantage of this opportunity than let it slide. And this right here is the MoneyVest index. As we have calculated this before, we're at 3.67. Now, the reason why this number is so significant is because it helps us track the entire technical positioning of the market in terms of volatility, the market breadth. We've got, the market's RSI reading. We've got a lot of other calculation on the back end that we have done to figure out what the MoneyVest index is going to be. And right now we're at 3.67. So if you essentially come over to this chart, 3.67 is going to put us slightly above that yellow zone. So 3.5 is the yellow zone here. And that's when we actually start coming down to some pretty attractive levels. Again, the best are going to be sub 3. So anything below 3 to 2.4 to 2 is going to be significantly better from a risk reward standpoint. And considering that we are at 3.67, we still have a little bit of ways to go in terms of where we can start dollar cost averaging and start buying back into the market. So 3.67 is still, I would say, a little bit more on the higher side. So let the markets come to you, let the prices come to you, and there is going to be opportunity, in my opinion, dollar cost average, and that's exactly what I'm planning to do, even though I am down a little bit over $15,000, and that's the whole idea, whole part of investing is also being okay with these types of days, right? So be able to stomach the losses, but also take advantage of the opportunities at the same time. And that's, the core of investing long term. And I'm going to share some statistics with all of you that's going to help you better identify and understand why it is so important to keep emotions aside and be more logical, and also invest while there is opportunity presented. So this right here is the S&P 500's performance on a daily, quarterly, 1-year, 5-year, 10-year, and 20-year basis, and since 1926 all the way to 2015. And what this essentially shows us is the probability of being positive versus negative. And one common theme you'll notice is that the longer we go out in time frames, in other words, the longer we go out in our investment time horizon, so from daily, go all the way up to 10 years, our positive probability increases. So we go from 54%, right, probability of profit on a daily basis. This is like kind of like a coin flip, all the way to 100% over a 20-year period. And the reason being is because the bull markets are obviously lasting much longer than bear markets. Bull markets can last us anywhere from 7 to 8 years, whereas a bear market can last us anywhere from 1 to 2 years. We experienced the last bear market back in 2022. Since then, the markets have recovered and done really well, ripping extremely new all-time highs. But it is possible that we experience a pullback or a correction once again. And that is a very, very common thing, right? It's something that market gives us every so often. We see a correction, we see a pullback, and then it rips back up to new all-time highs. So again, the probability for us to be positive over a 10 to 20 year period is significantly more than for us to be trading daily or quarterly. Again, you got to have an edge, you got to have a strategy in order to be trading successfully. But if you are looking to invest long term, the probabilities are really high and in your favor over a 10 to 20, let alone, of course, forget about 30 to 40 years worth of probability here, because that's even higher. That's close to 100% as the markets have, of course, continued to push higher. So this right here is going to be world excluding the United States, and this is S&P 500. This is going back as far as 1970 to 2023. Monthly 63.4%, 1 year 80%, 5 years over 90%, 10 years 95.4%, 15 years 100%, 20 years 100%. So what that means again is probability wise, the probability for you to be in profit over a 15 to 20 year time frame with the S&P 500 is 100%. Now, this is only a analysis based on the aggregated indexes. This is not based on individual stocks. So again, if you are looking at analyzing individual stocks, it is really, really important that you look at those companies in a very you do your due diligence and you look at those companies based on what mode do they have, what kind of what kind of financials do they really have in terms of revenue and growth related to operating income, net income, profitability, cash flows, all that good stuff. And that, of course, is going to be available on all of our MoneyVest platform, including the MoneyVest metrics, as well as the fundamental analysis, ratios, analyst estimates, calculating intrinsic value based on discounted cash flows, and of course discounted earnings as well. So all that is going to be available on our platform with a 51% discount if you're interested in joining us. But the bottom line is, don't let this market scare you. This is something that we did talk about yesterday in one of my previous videos. I mentioned that don't fall for it. Don't fall for the bait the markets give you as they are recovering a little bit. As you'll notice that on Monday, earlier this week on July 22nd, we did see a bit of a relief recovery or a dead cat bounce. And then of course now we are just straight up falling, and we are down to a dip for the S&P and a pullback for the NASDAQ. But this is going to be opening up the buying opportunity for us. And again, I'm going to be sending out all the alerts in our Discord, exactly a shopping list of all the stocks that I'm interested in buying during this market sell-off, and what prices that I'm looking at in terms of intrinsic value, as well as all the trade alerts and trade ideas also shared in our Discord as well. So coming over to Magnificent 7, almost all of them down. Tesla leading the way, down almost 12%. Google down over to 3.6 after the earnings. And again, they also did report on yesterday after the markets closed. We do have non-GAAP numbers here for revenue and EPS. So EPS came in at $1.89, revenue at over $71 billion. And then we also do have, of course, Meta down almost 3%, Nvidia down over 3%, Apple, Microsoft, AMD, Amazon, Netflix, all of them down anywhere from 0.5% to as much as 2% on the day. So get ready, strap in. It's going to get potentially worse from here, as this could lead to a pullback or a correction, in my opinion. We could easily be down over 10% from all-time highs, but that is only going to represent better opportunities for us to dollar cost average into and buy more aggressively as I'm increasing my cash exposure. And also, I did close out my covered calls on Tesla for well over 90% profit. So we did sell, of course, calls on Tesla prior to the earnings. And this right here was the trades and the profit on those calls. 97% profit on one of those Tesla calls at $295 expiration, and the other one at a 92% profit, locking in at just over $1,000 in profit on Tesla calls. So again, links going to be down below. We'd love to have you on board. If you have any questions, let us know. 51% discount available until the end of this month. Happy investing. I'll see you all in the next video.